everyone. What's up, guys? Welcome to our new broadcast channel of WuBlockchain. This channel is dedicated to providing a global audience with perspectives and trends from the Asian market. So if you are interested in the insights or the what's going on in the Asian crypto industry, please remember to subscribe us. So today we are honored to have our first guest join us to share his latest insights, Daniel. Hi, Daniel.
Hi, nice to meet you. Thank you for inviting me.
Sure. So, could you give us like a brief introduction about yourself?
Yeah, absolutely. Well, first of all, hello everybody. My name is Daniel. Very happy to be here. As I think I'm the inauguration guest, so very honored. So a brief intro about myself. I'm a founder and CIO at Kryptanium Capital. It's a non-biased crypto hedge fund launched in mid-October last year. So we're only 3 months old. So I've been in the blockchain industry for ever since 2018. So 2024, this year is my 7th year in the space. Prior to founding this fund, I was a co-founder at Matrixport since 2019. So from hindsight, I'm pretty lucky to have launched this fund at the right time, as the fund has done pretty well, as well as the market has been doing well. We've been outperforming Bitcoin every month, so can't complain. Yeah, I'm very happy to share my thoughts about the space. Today's here, yeah, very excited.
Yeah, so today, thank you, Daniel. And today we will discuss the impact post ETF and also views on this year's microeconomic trends and some opinions on different tracks in other cryptocurrencies. Stay tuned if you are interested. So let's jump into our today's topic. I want to know, Daniel, so lately people are talking about the Bitcoin spot ETFs because it's such a hotspot topic. So what do you think will be the market trend after the approval of the Bitcoin spot ETF? Will there be a sell the news phenomenon, or will it need to a significant increase in the new demanding for Bitcoin?
Yeah, absolutely. I mean, it's the talk of the town, right? Everybody's been talking about it before the approval, expecting approval, after approval. It's one of the really, ETF approval under the spotlight for months. So I think, first of all, to answer your question, will there be sell the news phenomena? I think it has already happened, because if you look at the data on day one of the launch of the ETF, that is last Thursday, Bitcoin run up to 48,900, something like that, below 49,000 at the very beginning of the opening, and then dropped slowly. And over the past few days, right now we're standing at, I think, 42,500. So we dropped like close to 15% from that peak. So there are definitely people selling the news. I think not only there are people selling the news, there actually are people selling the GBTC, because people are locked with GBTC for a long time. That the net sell flow on that pushed Bitcoin lower, I think. So that is the fact. But what will be the case for next weeks, what will be the case for the next 6 months, I think that's more important than what happened in the past. So I think, first of all, we have to be really data dependent. I think we have to have a dashboard of all the ETFs' balance and see their volume and the change of the balance every day, for us to have a good idea that on day-to-day and weekly basis, what do we see as an inflow or outflow into the ETFs. So data shown us that over the past 2 trading days, Thursday and Friday last week, there's between $500 to $800 million of net inflow into the ETFs, which I think is pretty cool. If we see, I mean, my benchmark is, if we see $300 million of weekly inflow for the next 2 weeks, I think that's good, because that means, although there are a lot of people selling, getting out of the GBTC position, there are still more buyers. And I think that will put a pretty good support on Bitcoin. But if the numbers are lower, or even net outflow, then we have to be a little bit cautious about it. And in the long term, actually, I would say I'm more confident, because we know how ETF opens up to people who didn't bother to buy it, or people who cannot buy it, for instance, the IRA, the retirement plan. So I think the net inflow into the Bitcoin asset class over a 6 months span, I mean, my number, I call that is $10 billion. There are people calling for 20 billion for the year, there are people calling for different numbers, but I feel it's in the scale of 10 billion, which will be a huge number, and that will be one of the reasons pushing Bitcoin higher, at least for the first half of 2024. Yeah, so that's my thoughts.
Okay, so I think you talk about the late inflow at the first couple of days, first 2 days, 1 days. I think not all our audience are financial people. So maybe you can share with us what is your benchmark, like your standard about the good net inflow. What is the standard? What's the number you think is good? Because I have seen a lot of YouTubers, some of them think that the first performance of ETF is not so good when they share their thoughts. So what do you think?
So I think your question is, what do I think would be the benchmark for the benchmark between good performance and a bad performance?
Yes.
In terms of the net inflow number on ETFs, right?
Yes.
Okay. To answer that question, I think, as I said, 300 million per week for the next 2 weeks is my benchmark. But to be honest, I don't have a lot of ground on why that number is. I'm just looking at, in the general liquidity of Bitcoin, normally in the history, how much inflow can push prices higher. So 300 million weekly is the number to me. And as you said, there are a lot of talks about, is this a successful launch as an ETF? Is it not a successful launch? I mean, to me, I think that's a totally different question. A successful launch describes that the issuers, managed to gather a lot of attention, they managed to launch it successfully, and they managed to see good numbers of balance on the ETFs in the first few days. And by that standard, I think it's definitely a successful launch. But people think it's not a successful launch, probably simply because Bitcoin dropped. But we got to bear in mind that ever since October, a good amount of the reason that Bitcoin went higher was because of the expectation of the launch, right? So you cannot blame on the issuers that your Bitcoin dropped today, right?
Okay, we got that. So my next question is about Arthur Hayes, the person. He has he's more has a huge influence in this industries, his opinions. So he also has a lot of followers too. And he has suggested that there will be a major pullback in March. So do you agree with this view? I mean, what is the relationship between the Federal Reserve liquidity and this year's economic trends?
Sure. Well, again, first of all, Arthur is very impactful in the industry. He was the founder of BitMEX, one of the OG in crypto. And, he has a trader's background. He has actually a lot of time and a lot of, good insight and put them into long articles and write about his opinion, which I really appreciate because, he's a billionaire. He doesn't have to, right? So I definitely respect him a lot. And on this topic, I have read about that article, which I think is a very interesting one. So I think what he was trying to say is he think that the repo balance, I would say reverse repo balance at the Fed is dropping. So he thinks going to March, probably the number will drop to a pretty low number. And more importantly, he talked about the BTFP program, which is the emergency program that the Federal Reserve introduced March last year to help save the regional banks from the problems of substantial markdown on their US Treasury holdings because of the higher yield regime. So he thinks that the program will terminate, RRP will go lower so that before the expected cut in the Fed, we may have a problem of liquidity. And that problem of liquidity can easily topple risky assets, topple Bitcoins, because risky assets have done a good run, no matter it's NASDAQ and Bitcoin. So I think that is his logic. So we look at it now, I think, I mean, to be honest with you, RRP is not something I know very well, but I don't think it's that important. But the BTFP program is very important to me, I think, as a program, because, well, a few days ago, the number shows on Bloomberg that there's $40 billion sitting with that program, collateralizing US Treasuries and borrowing money at OIS plus 10 basis points. So obviously banks are using it. And also I read about the news that the vice chairman of Federal Reserve, I forgot the name, I think it's called Michael Barr or something, and he basically said that the program will be terminated. Well, given he is vice chairman, I think it looks like they're terminating that. So the first answer to your question is he worried about BTFP and looks like it's terminating. So now the next question is, what's going to be the impact of that? What's going to be the impact of that on the small and medium banks? Are we going to have a problem with liquidity? If so, what will the Fed do? I think these are the following questions. I mean, I'm not close to Fed, so I don't know, but I'm trying to make a logical, make some logical thinking process and trying to get to a conclusion. So I think, first of all, it's very hard to figure out if we are going to have a problem with the small and medium banks, because right now, the way it works is you collateralize your US Treasury at par, although it may be valued at only $70 or $60, if that is a very longer dated US Treasury that you bought at a lower yield, lower coupon. You can borrow at OIS plus 10 basis points. It's been reported that the participant can earn 50 basis points arbitrage profit by doing that. So that means even if I don't have a liquidity problem, I probably nevertheless will use the program because I can make more money. Mm-hmm. Because of this fact, we just don't know how many of the banks really need it. They probably just want to park money and make money, right? So this part, we're already getting difficult to a conclusion that, well, we have a crisis. And number two, if we have some crisis, it's very unlikely to be like as high profile as SVB, because people learn from history, people learn from mistakes, right? It's probably going to be idiosyncratical, smaller banks running into some issue, and some of them may call the Fed saying, hey, we probably have a problem with the bank run. And Fed will obviously be very immediate to help with lines, because nobody wants to see March 2023 happen again. So what I'm trying to say is we are in an election year, 2024, extremely, extremely sensitive, that nobody wants to have a problem. So because of that, I kind of feel that although BTFP will be terminated, I don't think it's going to be a major problem with liquidity with risky asset. But having said that, I would definitely put a rain check on March and trying to see going into it if we see the market start to, feeling shaky into it, because, there could be more information, right? Yeah, it's a long answer to your question. I hope that answers it.
Actually, it reminds me of another question, because we have been quoted his articles lately. So it's very interesting. I don't know if you read the article that he said, let me check it out. He said something about the long-term Bitcoin ecosystem. It's more like very long-term. He believes that if ETF managed by traditional financial institutions become too successful, and they will utterly destroy Bitcoin. Bitcoin will disappear. Because in his logic, he thinks that because Bitcoin is the solely currency that depend on liquidity. It's not like fiat money, because fiat money to him, I feel like it's a piece of paper and it's rubbish. We'll quote to him, not my personal perspective. But he also said that if the Bitcoin, a majority of the Bitcoin is using as a value saving and instead of circulation, the miners will shut down their machines, and the network will die and Bitcoin will disappear. What do you think on this?
Oh, I do not agree. Okay, so let's try to think about that. First of all, we need to be reminded that Bitcoin is a POW coin. It's not a POS. So that means how much Bitcoin does the let's say Coinbase having custody, how much money can the US government touch? How much money does the issuer touch? It does not matter that much, right? I mean, as we know, I don't know the exact number. The China government and the US government both hold pretty good numbers of Bitcoin. I think 400,000, so like 1%. But it does not matter. That's number one. Number two, it matters in terms of circulation. That's right, because if somebody is holding a lot of coins and does not move it, then obviously you have less Bitcoin in circulation. But having said that, first of all, I don't think we're getting that close to that point, because we probably need one agency to hold like 20% for us to talk about that, or 10%, which is way, way far. Number two, I think of Bitcoin not as currency at all. I think of Bitcoin as the digital gold. So that means, I mean, all the central banks have a lot of gold, and before the gold standard was demolished, well, central banks have more gold, right? So I don't think that's an issue with gold either. So on this perspective, I don't think there's an issue at all. But the last point I want to say is, what if a lot of agents, some certain agency controls a humongous amount of Bitcoin mining power? Would that be a problem? I think theoretically, yes, because somebody controls 51% of Bitcoin, and that will be a problem. But this conversation has been discussed way before today, right? Even back in 2013, 2014, 15, people were talking about Bitcoin mining companies, mining machine producers. Probably they have too many machines. But, people act with their own benefit. If you have so much money invested to mine Bitcoin, the last thing you want is do a double spending attack on Bitcoin and make the value of Bitcoin go down 90%. You lose the most, right? So in general, I don't think the ETF, the introduction of ETF, and in the foreseeable future, the ETF will create a negative impact on Bitcoin. Not for me.
Okay, I understand. So my next question is the market. The market believes that the next focal point that should be the approval of Ethereum spot ETF. So which would drove up the ETH ecosystem. So what are your thoughts on this view?
Okay, sure. I agree. I mean, we saw Ethereum appreciate against Bitcoin by like close to 20% after the Bitcoin ETF launch date, which is, I would say, crazy. I mean, I'm bullish on Ethereum. Personally, as a fund, I think even at 0.06, the trading pair is undervalued. But I don't think a 20% through a week thing is you can continue like doing that speed. I think, and coming back to your question, all of a sudden everybody just started to expect in 4 months' time Ethereum ETF will get approved. I think that's a little bit jumping the gun, because first of all, Ethereum is a POS token. A POS token have staking yield, which can be seen as yield bearing. So if you cannot argue against the point that, well, now you have yield there. And if you cannot prove that the whole Ethereum ecosystem, there's no substantial contributor to it, that you're not a company-like entity, which I don't know how would SEC think about it, about Ethereum Foundation. I mean, I think Ethereum Foundation is definitely not like a central power in Ethereum, and holding Ethereum like a company, but it may not be how SEC think about it. And lastly, Gensler, the current chairman, in last year, he has mentioned, I think, multiple times that he thinks Bitcoin is not a security, it's a commodity, but everything else in crypto probably is. So I just felt that probably the agency and the chairman wants to have more time to monitor what's going on with Bitcoin ETF and then make the next step. Essentially, SEC is a regulatory agency. They don't make money by being the agency. What they do is they want to protect retailers. So it's like a shorter option. Anything wrong happens, it can be blamed on, right? Then why do I go so fast that somebody's going to blame on me in an election year, right? So I feel it's not going to be so fast, but at some point it's going to get approved. But May will be too good I would say.
Okay, because I think I saw a lot of like people say that it's gonna be approval like in next 4 months, within next 4 months, and also like well we also issue an article that we believe it will be passed in the next 4 months, 80% of the chances. So, but we are not offer any financial advices, guys. So we're only here to share. So my next
Yeah, of course.
yeah, my next question is that let's talk about other smaller like cryptocurrencies. So which tracks and projects are you focusing on right now? And what insights
Sure.
do you have? Do you have anything to share with us and our audience?
Sure. Let me try. So for our fund, we focus on two categories of tokens, very old school, classical, I think. Number one, that's chains. So layer one chains, layer two chains, modular blockchain. Number two, we look at DeFi, which is basically anything that's financial service related protocol or DApp application. We don't really look at games, etc., because we don't have the expertise. So I'll try to talk more about these categories, talk about what's going on there, what's our thought, without mentioning specific tokens, because it's a little bit sensitive. So in the first part, on the chain part, I'll talk about layer ones first. So layer one, by definition, we're talking about people competing with Ethereum, Bitcoin. They have their own monolithic chains and trying to build ecosystem. So first of all, we obviously like Ethereum, but we also like containers to Ethereum because, you know, it's always great to have competitions, right? Solana has been the competitor for the past few months and for the past few years. And obviously they have done a great job, especially withstanding the worst storm people can imagine, the FTX catastrophe, and managed to walk out of it. Look at Solana, you know, I don't know how much is up for last year. I mean, a lot, 5 times, something like that. So, you know, if you look back on the success or the, you know, why they can run out as the biggest competitor to Ethereum is because they have a great tech, because they're fast. They have problems. They used to, you know, have problems every few months, but they're getting better. And it's also, they have a great community it's really supportive of the ecosystem in a bad time, in a good time. And when I say community, I'm not talking about the users only, we're talking about developer community as well, because that what makes you know, the application becoming better and better. And you know, using this format of standard, we look at other layer ones. And there are a few, which I'm not going to name, but you know, they probably have better technologies than Solana, and they probably can have a good run up in the cycle, which we are excited about. Number two, on the layer two side, I think layer two and modular blockchain, I'll talk about them as one category because layer two itself is a modular experiment on the Ethereum blockchain. The reason modularity happens on Ethereum is because Ethereum as an old school technology is not fast enough. Very simple. And Ethereum Foundation actually want people to modularize that so that Ethereum itself does not have to undertake everything, which introduced the project of Arbitrum optimism, and we all have witnessed how they grew over the past 2-3 years. Good TVL, good activity, also innovative depths as well. So that's very encouraging. We look at those things. And we continue to look for innovative applications on those chains. We look for, you know, good competitors in the space as layer two who try to take cakes from Arbitrum on optimism. It's actually the right time to look at that because the Dunquin EIP-4844 upgrade is happening tomorrow in the first testnet, and probably the mainnet will be launched in February, March, which is very helpful in reducing the cost of all the layer two. So, you know, it's a space that's going to be very interesting in 2024. Lastly, in this modularity part of the world, you know, we have Celestia, which as a token has a great launch because the price went a lot higher. But I mean, if you look at the real tractions, people really using Celestia as a data availability layer, is still quite few. So I would say it's very early stage, but we want to look at things like that, the new challenger in the modular space, and trying to see if we can find tokens that has capability to sustain growth of their ecosystem and application. And lastly, we talk about DeFi, right? So from my perspective, I come from a background of finance. I obviously probably have a preference on the financial layers because I know the business better. At the same time, I think it's pretty arguable that the DeFi as the application layer is the only application layer that has managed to finish 0 to 1, finding the product market fit, and 1 to 10, growing the TVL and sustaining its business even through the worst of the bear market. So I think it's not something a lot of people look at these days because they're like, okay, DeFis are so old, there's no pumping, it's not interesting. But to me, I mean, crypto is interesting that it is one side of it, which is really crazy, which is very hype, which is a lot of crazy stuff happening. But on the other side, it's the real technology, and you need the real business building on that technology, right? You just can't always be 100% hype. And DeFi is that thing. There are the protocols, there are blue chip protocols or smaller protocols. They're actually making good amount of money, having a pretty low valuation if you think from a PS and PE perspective. And you're going to see the resilience of the team, resilience of the protocol continue to roll out new versions, be more useful, some of them becoming more innovative. So, this is something that I'm really excited about because we need application layers. And I don't know games, so I want to find the hidden gems on the undervalued projects in DeFi, and I think there's a bunch of them. So that's something I'm excited about. Yeah, I think that's enough. These 3 categories are the things that we look at, we're excited about in 2024.
Yeah, and that's because you mentioned about thinking upgrade, so it happens tomorrow. So let's talk about this upgrade. People say that it is supposed to like drop the gas fee like dramatically after the update because the price is like relatively high right now. So what do you think the impact after the upgrade? The impact if let's say I'm a builder or I'm a developer, I want to build up a project. You think what is the impact you think after this upgradation?
Okay, so the first implication is obviously much cheaper fees, right? And that itself is already pretty significant because let's say right now, I mean, I'm not looking at the numbers. So this morning on Ethereum, you do a simple DeFi action, takes you $20. If you do that on Arbitrum, probably that's $3. And after this upgrade, that thing is going to go to, I think, 0.3 to $0.6 on Arbitrum Optimism. So that's already a great thing, okay? Just level 1. Level 2, we have a lot of DK EVMs rolling out, okay? So using zero knowledge technology instead of the optimistic assumption, supposed to be even more secure. They have not been in big scale. I think on one part is due to the process of business development. On the other side, I think the provers are pretty expensive, etc. So the chains are not that cheap. So, I think, I could be wrong, Dunkun also help those guys because in general, reduce a lot of the cost of running a project on layer 2s. Number 3, let's think about the projects on layer 2s right now. There's still more classic project, trading related, lending related. We don't have high frequency related stuff there. Well, payment is something people talk about a lot, right? And Solana at the moment is working a lot on that front. I still think it's arguable that high frequency activities on chain probably is chicken and egg problem. So when the technology is not there, maybe the application won't happen. When the technology is there, you're wondering where is the real application. But you need one thing to be ready. A much cheaper chain will make those high frequency. In general, I think the implication on that can be 1-fold, 2-fold, 3-fold. But when you go to higher layers of folds, you could be thinking too wild, not on the ground. So I won't continue here, but I think it's definitely a great thing for the chain.
Yes, yes. So I think that's enough content for today. So thank you, Daniel, come and join us. And for all our audience, that you guys can leave in your comments in our commentary sections, and you can interact with us what kind of topic you guys want to hear we talk about. So maybe we will choose your topic. So thank you, Daniel, and see you next time. Maybe next time with us too.
Yeah, for sure. Thank you, Xinyi. Again, appreciate the opportunity. I had a good fun talking about this topic because I thought about them all the time. And yeah, I would love to see how the community, how your humongous numbers of followers think about our topic, and I would love to learn from that.
Thank you, and see you next time. Bye bye.